What is up, party people? How are you doing? What are you doing? What are you doing? See how the value of that changes when you change like, what are you doing? What are you doing? It's like the meaning changes. What do you think you're doing? Michael, Martin, what do you knew when you heard your full name, shit was about to go down. Anyway, today's comment comes from Giovanni Raffaelli, if you're from Rio. Otherwise, it's Italian and it's Raffaelli. 4508 is a subscriber. Thank you, Giovanni. This comment comes on a video called Boost the Relevance of Your Chart Analysis. Who wouldn't want to do that? Welcome back, Michael. Great video. Thank you. Can you talk a little bit more about, quote, buying when there's buyers and not buying on the pullback? That statement certainly caught my attention, as most retail strategies out there teach you to do exactly the opposite of what you suggested. Thanks. Well, thank you for writing. I'm going to like and give you the thumbs up. I'm the sixth thumbs up, and I hearted your thingy. Thank you, Giovanni. I don't know why people think that buying on pullback is a safer strategy, because the way I look at things is this, is like take fundamentals out of the way, or actually leave them in. You have millions of people looking at certain instruments out there, right? Call it Coinbase, right? And if you look at that chart, today is Thursday, or at least you're watching this on Thursday. Today, for me, is not actually the Thursday that you're watching this video. But if you look back at how it closed last Friday at 130.78, and then it looks like at this recording, it's down to about 130 even in the aftermarket, again on Friday the 12th. After putting in a high, probably on all this news about the Bitcoin ETF, it certainly rallied from whatever that was, 80 to 180. That was quite a move, obviously, going back to election day, so beginning of November. And then on the 29th, coming into the end of the year, you had a couple of big, massive sell-offs, a couple of big, like full ATR days. ATR at the time was 9, and you had a $12 down day on the 29th, followed up by a $17 smashing. So you lost $30. This is buy and hold, mean reversion. You're right at the mean at that point. The mean based on the 20 period moving average is 156, call it. And you closed at 156 on January 2nd. So there's your pullback. Now, how did that work out for you? Again, if you're day trading, I don't know, maybe you made money on the 4th and on the 8th, which was a Monday. But since then, it's been a bloodbath, basically. Then you had the big sell-off on Thursday where you had almost 2x the volume of the average volume, down $10. And then Friday, another $10. So this is what happens when you buy pullbacks, is that you don't know that it's not going to just mean revert. It's not going to keep going. Right? Now, I could easily cherry pick stuff that showed you where it worked. The question is, like, look at JP Morgan, just put in a new, what was that, a historic high last week on that same Friday, and the thing completely reversed down after putting in, it looks like 176 and change. It settled at 69, so it gave back all the gains, and then some, closed low. That's a pullback. So, I don't know what it's going to look like by the time you watch this video, because I'm only doing this, on last Friday. You saw about almost 2x in volume on that Friday, and the volatility basically went up about 25% over the past week. So you'll just have to see, like, what emotional needs are, right? Because if we have two payoffs to every trade, the financial, which is the P&L part, as well as the trader psychology, emotional intelligence part, right? What's in it for you? What do you feel like in your body by buying that pullback? Do you think that it blew off some steam? We shook out the weak hands? Because I look at all that language as bullshit. Because the people who are saying it, they don't even know what they're talking about. They just heard this Johnny Cochran, if it doesn't fit, you must have quit kind of logic. And then they're spouting it out in social media or in discords like they invented the statement itself. But they don't have the math behind it. So if you can back test something and say, if there's a mean reversion, right, a rally in a downtrend up to a moving average, right, or a pullback to a moving average, whichever one you're going to use in an uptrend, then what's the entry point? Because here's the question for you all. What is a pullback? Ahead of time. I know what it looks like now, but what is your definition of a pullback? Again, if 50 people saw a car accident and you ask them what happened, the cops are going to get kind of an average of a response, right? But you'll have 50 different viewpoints, literally, right? Because 50 people aren't standing in the same spot, so you'll have 50 different viewpoints. What happened? So when you say pullback, what is that? What does that mean to you? Because I'm sure the folks who bought Coinbase, who are like, Bitcoin's going to 1 million, which again is other epic bullshit. Like no one can predict where it's going to go. They all say it so emphatically, right? Where's it going to go? What's your definition of a pullback? What percentage does it have to be? Because I know you're using percentages, not dollars, right? You're trying to act like a pro, even if you're not there yet. And then what's the entry? After it pulls off, right? Do you still buy it? Like if it's down 5%, do you just buy it at minus 5%? You figure out what the price is, and that's what that would be your buy limit price. Because in this instance, we've shown, at least with Coinbase, sometimes they pull back and they keep pulling back. Because the pullback, in the way I like to look at things, I'm always looking from micro and macro. So I'm a very meta kind of person when I look at, because I've seen all this stuff before and I've tried everything on. When you think about a correction, right? If something's going to be corrective, and I think there are stock traders out there, if you've read any of the books on really good stock trading, there's like an 80% chance that something's going to have a 50% pullback at any given moment, right? Which is big. It means it's a 3-to-1 favorite to have a 50% drawdown, at which point you'll need to see a 100% rate of return to get your back to a break even. Then the question becomes, after the 50% pullback, you think there's great value there because you believe in the industry of the fundamentals, right? If you did that with Bitcoin after it hit 60 at 30, it went down another 10K. That's a big price to pay for your bullishness. So I always think like, and the point of the matter is like the pullback to me is the beginning of the correction, right? You just don't know it at that time. So it's not a panacea. You think like, oh, Bitcoin at 180 was a steal. You love it at 160, but even at 160, you don't know that it's not done. And for all I know, this thing could be $120, 100 by the time you're watching this video. I don't know. Maybe it could be back to 160. I have no chart. Looks weak. It closed on a Friday. The low was 130.37 and it went off at 130.78. So 39 cents above the low for the day on a day when it was down $10.38. So it closed extremely weak on a week where it was, it's given up $30 or whatever that is, 20%, something like that. Maybe somewhere between 15, 20%. So be careful that the pullback that you wish for, right? Now, so think about it this way too. If you look back at when it broke out above $80, so let's say that was November 2nd. When did it really pull back meaningfully enough for you to entry into that position? Because it went from 80 to 180. That's a $100 move. So if I look at this chart, the 13th and the 14th, that's not really a pullback. The 21st is not a pullback. Maybe, the end of November on the 30th. But again, the closing price was 124. The moving average is 105. So you're still well above. Again, what's your definition of a pullback? Right? Then you've had a down day on December 6th. That was a Friday. And then nothing really. It kind of channeled. There was really not an opportunity to buy any type of meaningful pullback until January 2nd. And that was after 2 days of bloodletting. And on that day, it closed low, right? The low was 55.35. And the close in futures, we say settlement 156.88. So $1.50, whatever. I'm just doing the math. $1.30. Say it closed $1.30 off the low on a day when it was down $17. So most people watching this said even down $30 from 180, which is whatever 1/6, loss in value. Okay, and that was a Friday. I think the second was a Friday. I think so. Anyway, no one bought on thinking that it was cheap at that price. So that, to me, is the danger of looking at pullbacks. Of course, you need to get a simulator and maybe back test it and say, okay, if we pull back to a 20-period moving average or a 50-day moving average, what do I need to see on the bounce, or how do I define the reversal at that point in order to establish my long, right? What's the trigger? And I don't find, and again, it's going to be different for everybody. There is not one answer, right? So I don't want a bunch of comments about how you can do it, because it's different for everybody. It has to come down to your tolerance for risk. And mostly you have to answer the question for yourself, why do you think a cheaper price provides better value? Because if you didn't get the breakout, even if you bought the thing at 90, Coinbase at 90, you doubled your money. And that was from November 8th. The high was, it wasn't even 2 months. You could have doubled your money. And that would be after the thing was up 10%. So this is why people are crazy with their numbers and they're pulling back. They think, oh, it's 10%. I missed a move. I can't trade that now. It's 40 times earnings. It's 100 times earnings. So all those metrics that you think that you've invested emotionally that are important to you, to me, they're not important. The price is what tells you the truth. Doesn't matter all the other stuff. Right? What does Brian Shannon say? Something along the same lines. Only price pays. For me, I think like you want to be buying when there's other buyers, right? Because they have more money than you. And the collection of them have many, many magnitudes, millions of times more money than you. So when the institutions show up and they leave footprints, because you can look at time and sales, who's buying 25,000 shares at a clip, right? Those people are making a serious commitment to the instrument. And in my experience, not 100% of the time, but as long as there's no material fundamental information that comes out that goes against the grain, right? Like Apple Watches, they're being sued because they stole the technology about the blood oxygen content. Like that's material. They're going to have to pay the people to go away. They're not going to solve it with software. I can assure you of that. You need to figure out like what it is. What are your rules around that? Because it's so subjective. And I know that institutions tend to support their positions because they have more money coming. Not only did they lay down a big bet, because they can't be buying 200 shares at a clip if you're a big mutual fund, right? If you're like some kind of index fund, right? Or otherwise, you have tons of cash. So you can't really follow what the retail people are doing because they don't know their ass from a hole in the ground. You have to watch what the institutions do. And if the institutions are stepping up with size, they're going to support their position. So when you buy with those buyers, you can benefit from some type of buoyancy. It's hard to quantify, but in my experience, I've seen that, right? You don't get that with penny stocks because you're dealing with a bunch of people who are buying stuff on rumor and conjecture, right? Maybe you can catch some short squeezes. I don't know. It's not really my expertise. But I don't want to be playing in a pool of amateurs. I'd rather be dealing, because you get so much more data from looking. Well, this kind of sounds redundant. You can get a lot of data looking at the data, right? But the right kind of data, the data for me that's meaningful, where I could say, okay, the thing's pulled back quite a bit, looking at Coinbase again. How come no one's stepping up if it's such a, and this is before the announcement. If it's so cheap and so valuable here, why is it closing basically at the low on a day where it got spanked 10% in a day? I could see if it leaked 10% over the course of a month or two, something like that, taking profits, this and that. sector rotation, whatever it might be. But you have to stop listening to people who don't know shit about trading. They're parroting things that they heard other people say, and they speak with an authoritative voice, and they create videos, and they go onto these channels thinking that they're players, and they're misleading you because they don't know what they're talking about. And great, if they've had a couple of years success, man, more power to them. I appreciate it. But ultimately, this thing comes down to supply and demand for whatever fundamental or technical reasons are there. And when you see weakness, I always say weak gets weaker. Like a weaker price, weaker behavior in the market becomes weaker. Why would I want to buy into that? There's no value, right? To me, there's no better value in Coinbase after it put in a high of 87.39. It comes down and takes out 160. I don't look at that as better value. The same way I'm not afraid of something that if you were looking at Coinbase back in around Halloween of last year when it started coming out of that base and you could have paid 85.90 for it. The move isn't, that's what I'm saying. Like when you get to 1 or 2R on the upside, it's just the beginning. That's how you have to think about this. The move isn't over. You can't feel good about taking $10 out of Coinbase after it doubled, right? So in other words, if you bought the thing at 80 and it went up $10, you made 12.5% on it at a time when it went up 100%. So you left 88% on the table. That's not something to click your heels about or go share on fucking Twitter or Stock Twits or whatever your favorite flavor is. And good for you for making money. That's great. But again, are you doing this for the emotional win so that you can peacock and posture up? Or are you doing this to make life-changing money? That's the point of this show. So understand my ethos here. I don't care about nailing a single trade. That doesn't mean any idiot can do that, including me. So I would not, that's what I mean when I say buy in a very long-winded way. When I say buy when there are other buyers buying, let them show you the evidence that they're willing to commit their capital. Then you can be a fast follower, right? Because they'll support the prices in the aftermarket, and then as the days, weeks, and months unfold, if there is such a great opportunity, and then all you have to do is ride the coattails. And that's wind at your back. Because when you can find 5-to-1 scenarios, when there's institutional buying, wind at your back, that's why I'm saying put your stops in, turn off the screen, and start taking Portuguese lessons. Learn how to paint red Dalmatians, because you'll make more money from just being in the right place at the right time, which you love. You love that. You don't need every win in your trades to come from your prescient genius. That's stupid. You know, it's very easy to make money if you will just let the market forces blow the wind at your back, not in your face. But so many of you want to swim upstream. I don't understand it. I mean, I do. I understand it. It's because there's idiots out there who are trying to make this sound like it's easy. And it is easy if you listen to what I'm saying, right? Because it's all judo at the end of the day. I'm using the market forces for my behavior, right? That's how you throw somebody. You get them off balance, and then you let the gravity or their muscular force do the work. I don't have to sit there and muscle. You should see some of the goons I train with. They're killers. I can't move them with muscle. Anyway, I love you guys. I know you're working hard. Please just understand where I'm coming from. Is it's kind of frustrating to know that there's a legion of people who are suffering out there because they're following advice of marketing gurus, not trading gurus, right? I don't even call myself a trading guru, but I think I'm speaking to you from a truthful standpoint where I share, winners and losers and focus on the things that I think are gonna help you make, again, life-changing money, not nickels and dimes. This is too hard of a business to make nickels and dimes. I wouldn't do it. I'd quit. At any rate, it's been a good week. Hope you're enjoying these types of things. Certainly let me know what you think. I don't have all the answers. I just have my own understanding of things and that context. And I appreciate you all being here, and I will see you tomorrow.